Hey everyone, hope they're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go and look at how ratios work with respect to acquisition costs. I did this a long time ago with one of the videos. It's back in history, and somebody was making comments, and I don't know if people really understand that your acquisition cost drops when using ratios and swapping metals between metals. You don't need the price of a metal to go higher. So when the comment was, platinum hasn't gone anywhere since the mid 2000s. It's super cheap. Why would anyone want to buy platinum? And the way that I view things, maybe it's a little bit different than others. I'm not trying to make dollar gains on a particular item. What I'm trying to do is I'm trying to play the difference between the two assets and the movements. So you could have movements between two assets happen over a long period of time. They cycle up and down against each other, the asset price. That's the ratio that we follow compared to history. And all you have to do is swap between assets to accumulate more metal over time. You don't need the price to actually go up or down over the long period of time. So you don't need the price to go up to make money in it. And I'm going to show you how that works. I know it's a little bit different approach. A lot of people think that you have to make money, but the goal here is not making money, it's making ounces. So, and I'm going to give you something to chew on here, I guess. So did you become wealthier if your dollar value per ounce doesn't go up, but your number of ounces go up? Yes. In fact, that is true wealth. Your dollar value can go up, and your wealth or your purchasing power can decline because the inflation in the system is growing faster than what your gains are in your stocks. So someone said, he made the comment, he or she made the comment on the lines that, oh, I can find stocks that can give me 6 times return or 7 times return over a long period of time. I'm going to smoke that with ratio investing, and I'll show you how to do it. This is something that I think is one of the best ways to accumulate wealth without taking on a lot of risk. Risk is putting money into a company. A company has a whole slew of risks. They can get bad management. They can get higher taxes. They can get lawsuits. They can get on and on. There's like 1,000 different things that can happen to a company. Literally 1,000. You could get a scare with food if it's a food company where they have E. coli or something like that, which Chipotle had it back in the day. You've got companies that there's a whole slew of things that can happen. I'll just say that. With metals, well, you don't have any management risk. You don't have any E. coli scares or food problems or processing problems or plants that burn down to the ground or bad management or any counterparty risk, et cetera, et cetera, et cetera. Basically, you can increase your ounces of wealth in an inflation or deflationary environment. You have no problems or exposure to risks in the market pertaining to currencies. Basically, it's like building a gigantic fort around your wealth where it's almost indestructible. There are negatives. I mean, over time, if technology gets good enough, the cost curves can drop. Conversely, inflation is pushing the prices higher with more dollars chasing fewer metals. Also, as you go in time, if energy prices go up, your cost curves will go up, which will push the price of those metals higher. Also, in mining, you've got declining ore grades. As ore grades decline, production may decline with it, depending on the projects that they have out in the world. And your cost curves generally go up if you decline in your ore grades because it takes more energy to extract it out of the ground. So there's a natural, I'll say a natural way to increase the cost. I should say the cost of bringing these metals out of the ground naturally increases, which over a long period of time increases the cost or increases the price of the actual metal itself. And then you've got supply demand dynamics and all that stuff, which is basically what we're playing. When the ratios go up and down against each other, we're playing supply demand characteristics against each other. And we're also playing market conditions where humans favor certain metals at certain times. So that's what is causing these ratios to go up and down against each other. And what I'm going to do is I'm going to show you the acquisition cost of a scenario of some very easy math to show you how this thing works. So this is, let's dive in here. I've got platinum to gold ratio. Platinum is 10 times more rare than gold is. I think that's roughly what it is. Maybe it's 30 times. I can't remember anymore. Maybe it's 30 times. I think it's 30 times more rare. Either way, platinum is a lot more rare than gold. I can't remember the exact amount. And the amount doesn't matter. What matters is the utility to society, the supply-demand relationship of these metals. Your rarity doesn't matter, and it shouldn't be priced necessarily off the rarity, and it should not be priced off of what comes out of the ground. What it should be priced in is your cost curve to get it and the supply-demand characteristics of that metal at certain prices. That's what prices the metals. During certain periods of time, certain metals do better than others. In an inflationary period of time, platinum outperforms gold, generally speaking. That's where you look at data from history, and you can see the sensitivity to inflation is greater in platinum than it is in gold. And conversely, when you get disinflation or deflation, platinum goes down a lot more than gold does. So what you could do is during market scares, you can load up on platinum, you go into an inflationary environment, and then you swap it at the end of that inflationary environment into gold. And gold will preserve your purchasing power. You can see here with the ratios, the extreme levels. This was the last end of an inflationary type move, early 2000s all the way till 2008. The ratio was 2.3 and 2.27, doing a Batman top. The bottom down here, since we were in a disinflation, low inflation, low interest rate environment, went all the way down. We had a scare at the end, and we reached all the way to a low of 0.46. That is actually the month that I swapped my metals into platinum. My gold, not all my gold, but a lot of my gold into platinum. And now we're at 0.5. Now, yeah, it hasn't moved much, but I expect this to work its way higher over time. This here is a good entry point for platinum because it's cheap in relationship to history. Even going all the way back to the 1970s, it was very rare to get under 1, or I should say 0.6, 0.7 would be a very low price, and that we got all the way to 0.46 and we're at 0.5 right now. So platinum's very cheap. Platinum to palladium ratio, this is also another one that I also have played. I swapped my palladium for platinum at roughly 0.32 during that market scare. We've seen the historical moves from 0.6 all the way to 5 to 5.5, and now we're at 0.7, which is still incredibly cheap. Platinum can substitute palladium in catalytic converters and in other uses. It's not an easy swap. It needs to be designed into it, but that does happen, and it is going on. Generally speaking, platinum is priced a lot more than palladium, say a 3-to-1 ratio. 3 to 1 is about this area in here. I'll put a horizontal line there. It's about there. That's about the average, somewhere around that range of 3 to 1, maybe slightly below, maybe 2.5 to 1, somewhere in that range. And right now we're at an anomaly where platinum is incredibly cheap to palladium, and it's increasing its purchasing power against palladium. I swapped right at that bottom. I got really lucky. I did it right. I did it in April of 2020 is when I did it. And I don't know if I got 0.32, but I got like 0.4 or something like that probably is what I got. And I got over 2 ounces of platinum for 1 palladium. Now, if I rode this all the way back up to 5 and I swapped it at 5 or so, and let's just call it a 2-to-1 ratio, I 10 times my amount of palladium in terms of ounces, irrespective of what these prices are. I don't care about price. I just care about what these two metals are doing in relationship to each other. An inflationary environment, that's generally very good for platinum, not so good for palladium. Palladium does very well in the disinflationary environment. That's why this came all the way back down. And now we're going into what I think is an inflationary environment where platinum could outperform palladium. Platinum versus silver, we can see the historical moves at the ends here. Almost 150 to the upside, 60 down here. We hit a bottom of 33 in August of 2020, and we're at 42.27. Those are the extremes. And right now we've broken out of the upside for a potential platinum to outperform silver. What that is indicating is that platinum is more sensitive to inflation than silver is. That doesn't mean that we're going to go straight higher. We could come all the way back down to 30-something before going higher. That is a possibility and probably a likelihood where this could drop back down in a banking scare or something like that. We'll get our full 3 kind of hump pattern here. And if we get back to 30, that would be another good time to purchase more platinum. And then they're probably going to punch the system with a bunch of inflation. That's my guess. Gold to silver ratio. We've got some extremes here. We went all the way down to 15.6 in 1968. We were at 100 roughly in 1991. Another extreme is 32 to 1. So 1 ounce bought 32 ounces of silver. We went all the way to a bottom of 113. It's a false breakout. And now I think we're going to compress back down to a level that's very low, whatever that level is. So these are the extremes for gold to silver. Obviously, you'd want to be in gold in 68 and onward because gold outperforms silver. Silver from 1991 all the way down either to 99 or all the way to the bottom of 2011. Generally speaking, silver outperforms during reflation trades. So it's important to understand when these things work because then you can gauge which metal you might want to be in. Inflation is platinum. Gold is when basically you have market scares and things crash. Gold does the best. Palladium is very good in disinflationary periods, and silver is very good generally when gold does somewhat well, but it's during a money printing reflation type trade. And that was from 2008 all the way down to 2011. You could have had a very good increase in your number of ounces against gold. And then palladium versus silver. Palladium is another metal that's a disinflationary metal. And you can see the rapid increase from 34 all the way to 215 almost, all the way back down to 14.5. Here's 19 here, 168 on the upside here, all the way, and we're coming back down to 61 right now. We're probably going to pull down further to the downside. And this is palladium to silver. And those are your extremes. And when you'd be swapping, you'd accumulate here, swap somewhere down in this range of 20 and below, swap above 150, swap when it gets down maybe below. If you can get below 20, that's a huge, huge win. And the way that this looks like, so if you were to look at this and do some actual math here, so this is what it looks like. We've got the data acquired here. I don't know why this keeps going there. So data acquired, I'm just making this up, 22. So let's say you bought 10 ounces of platinum at $950 an ounce, which basically what I've been doing. And I'll just say, let's say an average acquisition cost of $950. It doesn't really matter what the price is. So you've got a total acquisition cost of $9,500. Average is $950. You swap your silver in the future at some point, and let's just make it a round number of 150 ounces. That was the top that we looked at for the platinum to silver. So let's say we got to 150 up here. I'm just making the math easy so you guys understand it. So you swapped it at that. You now have 1,500 ounces. You paid a $2 premium. So let's say that's what it costs to make that transaction happen. And the total acquisition cost is $3,000 because it's 1,500 times $2 is 3,000. You add these up, which is E2 plus E3, which is 12,500 divided by your 1,500, and your total acquisition cost is now $8.33. So if you were to price what you paid here divided by 1,500 ounces, that is your total acquisition cost is $8.33. And let's say you swapped back to platinum at 38. 38 is this area somewhere down here. There's 39, but 32.98. I chose 38 randomly because that's where it was. So you swapped back to platinum at 38. You paid a premium of $65 an ounce. So that's 38 times 65 is $24.70. You add all these three up, divide it by 38 ounces. Your average acquisition cost is $394. So you've got $394. Now, if you look at what you hold, and this is swapping, I don't even care about what the cost of the actual metals are. But let's say you've got 10 ounces. You've gone to 38 ounces. Did you increase your wealth? Yes, you increased it by 28 ounces of platinum. And that, and in dollar terms, it generally goes higher over time as these metals and cost curves continue to go higher. And then you swap it back. Times 150 times 38 is 5,700. If you got another 150, you paid a $2 premium to do it, which is the cost of 11,400. You add up the entire cost, which is 26,370, divided by 5,700, and your total acquisition cost is $4.63. So per ounce, by swapping these metals back and forth, your acquisition costs asymptotically approaches zero with this type of thing. And you have no inflation, no deflation risk, no risk of default of a brokerage account, no risk of potential taxes or other things that can be applied to a 401k or something like that. It's out of the system. So this is a way that you can increase your wealth by doing this. Now, let's just say that we have silver, and let's just say it's like $25 an ounce. So we can take this times 25, and you have $142,500 by this many rotations, only using platinum and silver. You can use all the different metals to increase your holdings at a faster pace. But this is what it is, 142,000. If you were to divide this over your total acquisition cost, that is a 5.4 times your money, or 640%. 640%. And I don't know the actual time, the actual time it's going to take from here to here. And I only use these as an example. It's not a end all be all, and this doesn't mean that we're going to get 150, and it doesn't mean that we're going to swap at 38. Platinum right now is the cheapest against all the metals. That's a fact. You can look at all the different ratios. You can even throw in rhodium if you'd like. Rhodium also did some crazy stuff. It was $650 an ounce back in 2016. It was the cheapest metal against all the other metals, much like platinum is. And when the market conditions change and when the demand increased for rhodium in catalytic converters with reduced emissions, they're trying to reduce emissions, it went all the way to almost $30,000 an ounce. Now that's in dollar terms. It also increased really well against all the other metals for ratio swaps. But that's how this works. You don't have to make money in terms of dollar money. You want to increase your ounces of wealth, and eventually your cost curves will push those things higher anyway. So the dollar value will go up over time, and this is when silver's cheap. So, I mean, I could easily say, okay, let's say silver goes to, I'm going to say a ridiculous number. Let's say we get it up to $300 an ounce on a scare. Now you're at 1.71 million, and it's 64 times your money or 65 times your money. That is a 6,600% increase in wealth. And I'm just giving you examples of how this works. It's a real low risk way to increase ounces. I played in a big way. It's I think the least risk, highest reward way to play anything. And you don't have to be an expert in business. You don't have to be an expert. You just look at ratios and say, okay, that's it. But we do this, and I do talk about the metals that I purchase on the website. When I'm buying, the thing that is the most important is how to enter this game. You want to pay the least amount of dollars per metal that you possibly can to enter the game with. Then after that, it doesn't matter. It's only your premium paid and your ratios, because then the entry point doesn't matter, because you're not transacting in dollars, you're transacting in ratio or number of ounces. So that's the game, guys. That's one way that you can play the game and make a lot. And I play this with a good portion of my net worth. That's what I do. And I've swapped. I did very well in Palladium over the years. I've done well with gold. I bought that really cheap. And now I think platinum and silver, the two, I think will do very well. But that's what I've got for today, guys. If you like the content, give me a thumbs up. Subscribe to the channel. Subscribe to the website if you'd like. Obviously, I have some of this stuff on the website that you can view as well. I have a lot of information on the website. So that's all I've got. We'll catch you tomorrow. This is Finding Value.